Greetings all, Ben here, East West. Today just going to have a look at some of the junior names in the uranium space, because obviously things are looking a little bit shaky this week after sort of last week's big sell-off on the close. So we're just going to start here with energy fuels, and first thing I'll do, I'm going to just run through a few names, but I'm just going to keep the same format to analyse them all. So the first thing I'll do here is bring in the Ichimoku overlay. Now, one promising thing about this is that we were running very hot, as we discussed, and now we've come back down and we're just running into the Tenkans. And so this sort of means that now, and we're just sort of here teasing the edge of the cloud, but this kind of now means that the market is starting to find some balance between price and time. So as long as we hold, and we'll get into these levels in a second, as long as we can sort of hold here and not drop too much further down, then there's a chance that this can stabilize. But, you know, obviously the big caveat to that is the overall market conditions, which I will get to as well. However, just on the weekly, this isn't a bad sign. Just coming in to touch this Tenkan, which just gives us a bit of balance. Now, just coming in here to the daily, and we'd highlighted that these areas that we'd want to hold, we sort of slipped through here a little bit, but this to me remains perhaps the sort of last line of defense for the bulls in the short term. So we've dipped into this area. Today's candle's not perfect, but we are holding this for the time being. I think if we started slipping back below through here, then we've got a bit of a problem. Now, one thing we can see here as we bring the volume up is that today was quite a lighter volume day. So whether or not that just means that there's been a lot of people who have exited here, so there's not as much selling to go through, or there's just been a little bit of defense by the bulls in here. It's a little bit too early to tell, but I think what we'd probably want to see is, you know, this volume starting to build again as we start to get a bit more accumulation going on through here. So we obviously will have to see how it pans out, but the volume today was much lighter, so, you know, less selling pressure, I would suggest, or at least the buyers didn't have to buy as many to halt the slide. Now, one thing that's also kind of good is that, well, I don't know, good's a relative word, but we bring up standard Bollinger Bands, okay? So the 20-day moving average, one standard deviation above and below as a measure of volatility. But what we've managed to do now is, even though we were teasing the top of this, is we've come back down. We're below the midpoint, which isn't great, but we certainly don't want to get below the lower edge of this band. Now, obviously, this is going to update as we go along, but I would imagine that the edge of this band will start to run into this support line, and then it's just a matter of seeing whether the market can hold the bottom of these bands. So another thing we've got to keep an eye on is this is on balance volume oscillator. So we can see here that basically the way I read this is, as this line's dropping, there is less. The market's trading more on the bids than it is on the offers. So we can see now that we've slipped into negative territory below the zero line of the oscillator, which just to me suggests that just for the moment the bears are in charge. But this is very short term. So, you know, this selling is just, you can see that I gave us a bit of a warning that even though we were running hard here, there wasn't as much trading on the offers, but bit of a warning sign, I think. I'm not panicked by this, but it just does make sense when you look at the market in this regard, that there is just more orders going through the bids than there are going through the offers. So that just leads me to think about the retracement of the whole thing. So I certainly wouldn't want it to get below 50, which sort of ties into this peak and this peak here, but definitely below this 50% line would constitute a real problem, I think. There are some connotations on the big account. I'm not going to put an Elliott onto this, because perhaps you could make an argument that you've got something like, if that's one, or this is one, somewhere here, 1, 2, 3, 4, 5. That to me is not very pleasing. I think it needs to have more of that sort of shape before I'd start to think it's an impulse. So that's why this could be a wave 4, but I'm not going to put, which actually would probably lead me to think that this is 1. You've got an A, B, C, and a zigzag here for 2. I'm not sure if that's lower. This is why I'm not really counting this in an Elliott sense, because maybe this is 3 and we're getting a big expanded flat for 4, and then we can kick up for 5, something like that. But that remains to be seen. I'm not going to go into an Elliott perspective on this, but certainly that 50% line, if that comes down to there, yeah, that's a problem. But for right now, I think we just watch this box, just see how the market behaves, because it is coming into sort of a wave 4-ish kind of area between the 23 and the 38.2. So yeah, just in the short term, this box is what I'm watching, and I would certainly want to see the market reclaim this area and push on to new highs. But if it got up here, I think that'd be a massive inflection point. So just moving over here to Denison on the weekly, and we haven't got to that point that we saw in the other in energy fuels, where we haven't got back to the Tenkan-sen. So that still gives the market a little bit of room to fall. Of course, ideally we'd like to go sideways here and let the line catch up rather than have price come down to meet the line. But the way the general market sits, you can't rule that out. So there is a little bit more room to fall here. One thing I did really like about Denison is that this peak gave us a really nice trend channel. So I sort of took this trend here, and when you sort of connect it up, if you extend that, it's not quite there, but it's pretty damn close. So that gave us quite a nice trend channel, but we got a shooting star right out of the top of it. So that's a little bit of a concern. Certainly the midpoint of this is something to watch when we tie it into all the other levels. But that's just how I'm looking at this market at the moment. It's still in an uptrend, but we definitely have a big warning sign here. So moving into the daily, and you can really see here that we've come right into the zone where we held before. We shot up, but we're back in it. So obviously this area needs to hold, I would suggest, in the short term. So that's what, $1.52 is the bottom of that. So, you know, we're on the edge here, but you know, this is the level that you'd want to hold. So the Bollinger Band is the same thing. We've just come down to the midpoint. So, you know, that overall, that, you know, that's not a bad thing that we're stabilizing at the levels, and we've just met the midpoint of the Bollinger Band. So, you know, reason for a bit of optimism there. But once again, the volume's just on the decline a little bit here. So, you know, it's the same thing, that there just hasn't been as much go through today. Does that mean there's less selling pressure because fast money's bailed out and there's not as many to sell? Maybe the bulls can just offer a little bit of support in here, but time will tell. We'll have to let the rest of the week play out. Now, just flipping over here to UEC, same thing. We're close to the Tenkan-sen on the weekly. We're not there yet, so there is a little bit of room to fall. I note that this is coming in right at the edge of this level, which we'll take a look at in greater detail. This is more tied to sort of daily levels. But, you know, there is a little bit of room here to fall, but we just have to wait and see. However, I think what you can garner from this is that we're getting closer to the point of balance. Okay, so if the market can just balance between time and price, which will be indicated by price just hovering with the Tenkan-sen, then we've got a bit of, you know, we can have a bit of optimism that we can go again. So I've just taken this box from sort of these old peaks, the top here, the bottom here, how we resisted a little bit here, we broke through, we've held, we've gone higher, we're back here, are we going to hold again? So certainly you can see even in the short term that this sort of area, just through here, is around this sort of $4.75, $4.76, pretty crucial. It ties into that. I wouldn't want to see the market slip any further below this. That would be not ideal, to say the least. And then you just sort of got to think, if we're going to have a deeper correction back towards this 50 line, well, that's probably going to bring maybe not so much this top, but these tops sort of more into play. But even that 50% line sort of lows below there. So, you know, you wouldn't want to see, I don't think you want to see this area broken. If we start getting down here, then I think we've got, you know, something a bit more major going on here. It's not the way I'm reading it just yet, but I'm certainly aware of the danger that we're going to slip further. Now, again, we've had declining volume and we're below our average volume, but I just wonder if that, you know, that this sort of, these bottoms here are just dragging in a bit of interest. And if you were a bull, more a long-term bull, this makes exact sense as the area that you'd look to defend, because you've got these tops here that held, we broke, we tested, we're back here testing again. Now, in a word of warning, the more times the level gets tested, the more likely it is to break. So we will have to wait and see, of course. But we've got this chop. We'll just see if that is going to be ongoing. However, I'll just flick it over to an Elliott sense. And just for argument's sake, if I'm going to look at this move as being impulsive, well, what I think I've got here is a one-way of what would be a sharp 2. If we've come up for a 3, then maybe what we're getting is a big expanded flat in the 4 before we go up and get the 5. Now, that remains to be seen. This may not be an impulse at all. At the moment, it's showing the tendencies of an impulse, but putting it together might be tricky depending on how you want to go about it. I think there's some validity to this. So maybe we've got an A extended B waving down for a C, where we sort of, well, you could say we've double bottomed. Yeah, I mean that's more or less a double bottom. So, like I said, there's reasons to think that perhaps this will hold. That there are some things going for it when you just think about it by itself. But like I said, I'm not asleep. I'm not sleepwalking into thinking that we're definitely going up. There's definitely considering how the whole market's behaving, there's definitely a big chance that we can come right back down, which would make you then sort of think, well, maybe this is it. But that as an impulse to me doesn't have a very pleasing shape because of the skinniness of the 4. I'd prefer to see something a little bit more like that. But, what I prefer to see and what the market does are two very different things. So just in terms of sort of danger points, well, the 50 obviously, and that would tie into sort of a bit of a last line of defense here for the bulls that we kind of tested here. This is the 50. I wouldn't want to see it come down here, because if we start coming down this far, then in terms of this being a wave, then you'd have to start to think, well, it might be complete, because you wouldn't expect a wave 4 to come down this low. It's just it just reduces the possibility that we do have an impulse unfolding here. So right now, as things sit and as I can see it, I'm hoping that this will prove to be the bottom of wave 4 and we can kick up for one more. But you've got to be very aware of the possibility that we can come down, and the reason for that is maybe not so much about anything more than just the general tone of the market, which at the moment is not good. So in a prior video, I was just looking at the possibility of this turning into an impulse down in the S&P. It's still playing out pretty well. 1, 2. Actually, I'll just redraw that, because I think you can make this an impulse, an ABC up for a 2 and a zigzag, a 1, 2. We're coming down here for a 3. Perhaps we put in a 4, and then maybe this is going to be a 5 to make 3 of the third. Obviously, that also remains to be seen. But we can't argue that the general market is just very weak, and this is the S&P too, so it's held up by a couple of big stocks. So how much weight can you put into this when you think about the overall stock market? Well, at this instance, I'd go more to the Russell to have a look at it, and it looks a bit more sinister in my opinion. Now, I've highlighted this in a previous video, but we've got a contracting pattern, and we've just broken here. Okay, this is not perfect. That would just lead me to think, when I look at the patterns of the market, that we've had this impulsive rip from COVID up to here, that we've got a leg down, a sideways leg, and we're going to have another big leg down. That's just what I would think, looking at this in a pattern perspective. Okay, and when I would look at that, we've already come down and tested the 50, but maybe we're going to come down as deep as this. It's not out of the realms of possibility, because we know that something like the Russell has not performed anywhere near those larger indexes that contain the larger stocks. So, the overall market picture here is not great. So that's why I keep saying, when we go back to uranium, that whatever your position is or whatever your view is, just make sure you've got some sort of plan to deal with a meltdown. Because the thing is that if the market just tanks, the whole market tanks, this isn't going to stop going down because of a thesis or because of uranium shortages or whatever. it'll just get dragged with the sentiment. Now, I think that the thing is, that's not going to be a problem for you if you've already worked out, okay, well, if it gets through here, I'm out. I'm just out, and then I'll sit back, I'll cash my chips, and I'll sit back and think about re-entering if something else pops up. Maybe I'll go again because I still like the story. But the one thing you don't want to do is just be sitting here blindly long, going, it's going up, it's going up, it's going up, and all of a sudden it's back like here or something. And at this point you go, oh, I think I'll puke, because if you've got no plan, usually where you're going to puke out is probably almost certainly you're going to puke at the bottom. So that's why I just say whatever you do, just have a plan. Just have a plan about how you're going to deal with any potential pullbacks, because right now you've already had quite a decent fall from the high. I mean, right now Energy Fuels is down 16.85% from the high, so that's a decent pullback. But if your plan was, yeah, that's okay, I'm mentally prepared to see it into here, well, then you're okay. Maybe you've long and this is the area you want to add. That's completely up to you. But like I said, just plan it out. Plan the trade the plan is what they say, and that's pretty much the best way to go about it. So once again, I'll just reiterate finally that you've just got to make a decision about what's going to feel worse. If you're out, say you got out here, are you going to feel worse? And you've got a profit here. Say you get out here, are you going to feel worse if the market goes up like that and you're left? Say you're up 20 grand here, and if you left it running, you would have been up 35 grand, but you've got 20 grand profit in the bank. Is that going to feel worse to watch it do that, or is it going to be worse to see it do this, where your 20 grand becomes 10 grand? Okay, so that's just something you'll have to decide for yourself. But I would suggest that generally speaking, for most human beings, most general psychological makeup would be it's going to feel worse to have your 20 grand profit turn into a 10 grand profit than watch your 20 grand profit might have made 35 grand. So just think about how you're going to go about it. That's all I'm saying. So look, the structures are okay for now. We're into the support areas. This is where it's going to test you out mentally. The overall market does look weak, so we have to be cautious, but that's just how I think we sit with uranium for now. Thanks for watching. Don't forget to like and subscribe. See you next time. Bye for now.